Hello everyone and welcome to the Chart of the Week. Now every day of the week there's some economic announcement being reported, and I thought we'd focus on one that was released last Thursday, and it's a doozy. Really what it focuses on is something very near and dear to America, something that makes us very proud as Americans, which is three simple letters. That would be GDP, Gross Domestic Product. This is the value of all the goods and services that we produce as a country. And of course, it's a measure of our economic power. The more GDP we produce, we become more and more dominant. Well, something changed recently, and I thought it might be nice to take a peek at this chart because it is certainly the chart of the week, as we have never seen anything quite like this with regards to the advanced GDP number that just came out. So let's pull back the curtain, take a peek. Here is the advanced GDP. Of course, there's three different readings of GDP. There's an advanced, a preliminary, and a final. A lot of people focus on the advanced because it's that first little window of insight as to what that GDP number will be. What was reported on Thursday was a quarterly decline of 9.5% with regards to GDP, which when you annualize that is a 32.9%. So let's just take a peek at what this looks like stacked up to other eras of time. Going back to 2000, you can see that when we had the dot-com bubble, GDP over here on the left-hand side of your screen just slightly dropped down into negative territory. You can see this red line here. That is the zero axis, so anything below that would show a contraction in GDP. Well, we had two little blips, two expectations of those little gold dashes there, but only one period. That's the third or fourth quarter of 2001 did we actually go negative with GDP, and that was after that massive dot-com bubble imploded. Well, we go forward a little bit further here, and you can see from 2003, 4, 5, 6, 7, we're in a great rally, and all of a sudden we have the financial crisis. Now, the financial crisis, you can see there are several bars that were down below that zero line again. That obviously is not painting a very positive picture for the equity markets because that means things are really starting to slow down. And we got down to, it looks like about 6% decline in GDP. That is annualized. Now, remember, they take that number, they multiply it by 4, and that gives you an annualized rate. Now, everything was smooth sailing after that, right? We had a nice long period where everything seemed to go rather well. GDP was generally growing every quarter above that zero line, which is what we want to see. And then all of a sudden something happened. You might have heard of it called COVID and economic shutdown. And you would think all expectations were it was going to have an impact, but I don't know if people really thought it'd be this significant. Annualized number that just came out on Thursday shows a 32.9% contraction. Of course, that's annualized, guys. That doesn't mean we contracted 32.9%. It just means if we take the current number, which was 9.5, and annualize that, that's what would be expected. Now, as we roll into Q3, probably not going to see as significant of a decline in GDP. Of course, they've been pumping money into it. They also have the economy kind of getting back on track. But it is interesting to look at this and say, this is a one-off. I mean, we have never seen anything remotely close to this sort of contraction on an economic front. And it made it the chart of the week simply because it's an outlier. It's one of those things that we probably won't see this happen again. Fingers crossed. Hopefully we will not. You never know. We might get another resurgence of COVID or something else that drops GDP even more. But if GDP doesn't grow, if we don't see economic growth in that front, you have to ask yourself the question, as a trader, as an investor, what's going to fuel this market to the upside? If we had a 9.5% contraction in GDP in the second quarter, yet the markets rallied so significantly, if you've looked at the S&P, we've had a monster rally in Q2, one of the biggest rallies we've ever seen in the financial markets. Seems kind of strange, doesn't it? Stocks are just going straight up, yet the economy as a whole, our output as a country, is plummeting. It makes it the chart of the week because it makes you wonder, what on earth is the disconnect here? Are the equity markets just completely overvalued, or is this just a one-off data spike to the south side for GDP? That, my friends, is your chart of the week. If you'd like to learn more, visit TraderMerlin.com or join us live on our show every day, Monday through Friday at 2 p.m. Pacific on YouTube.